For the quarterly strategy and outlook report on Global High Dividend, we have here with us today Ghielen, Senior Portfolio Manager. Carl, equity markets had a strong second quarter. Was Global High Dividend able to participate?
Well, indeed, we had a very strong second quarter in equity markets. MSCI World rose between 5 and 6% in euro terms, so a very strong quarter. Many equity markets reached new highs on the back of very accommodative monetary policy, but also the improvement in the global economic outlook. The Global High Dividend Fund participated nicely, lagged a bit versus the broad benchmark, and that was mainly due to stock selection in energy. Energy was one of the best performing sectors in the second quarter due to the rising oil price. And we didn't own two of the big names in the US like Schlumberger and ConocoPhillips. So that's the reason.
Any style trends in the last quarter?
Well, not particular on a global level, but if you look on a regional level, in Europe, we saw that investors clearly preferred high dividend names. Investors were looking for utilities, energy companies with high dividend yields. So the high dividend style did outperform in Europe. It looks like the search for yield is back again in Europe. We saw the ECB announcing again some stimulus measures. So the expectation is for interest rates lower for longer. And I think that triggered the search for yield again back in Europe.
So looking at this context, what were the most significant changes that you've made to your portfolio in the last quarter?
We made only a few. Most important was to take some profit in the utility sector in the US. Some of the names became too rich, too highly valued. We redeployed some of that money into European names. In the telecom sector, we made a switch out of the very good performing British Telecom, and we switched that to Vodafone, our current holding. And finally, in the IT sector, we took some profit in one of the well-performing names.
Right. And would you like to add something on positioning?
Well, as you know, we have a very nicely diversified portfolio from a sector and a regional perspective. If you look at the sector perspective, then the main deviations from the benchmark are underweight in the consumer sectors. We see the valuation still too rich and fundamentals are deteriorating a bit. From a regional perspective, we have still the underweight in the US, where we see limited opportunities from a valuation perspective.
And finally, we've recently heard some news about anniversaries. What can you share with us on this topic?
Yeah, indeed. We have to celebrate success, but also celebrate anniversaries. The Global High Dividend Fund already is 14 years old, but now we have two other funds in the family. The Euro High Dividend Fund became 15 last March. And in December, we will have the Europe High Dividend Fund becoming 10. So this clearly shows that we have a lot of experience in dividend investing. And moreover, the portfolio managers of those two funds are the same since launch. So same portfolio managers since launch. And I think that's pretty unique in this industry.
Congratulations.
Thanks.
And looking forward to speaking to you again soon.
Okay, thank you.